Turning to our market tracker. Our market tracker shows that the position and long-term uptrend on the S&P 500 remains fully intact. The S&P 500 smashed above 3,000 over the weekend. And by the way, you can read my latest market commentary here by clicking on this. But just moving real quickly here to the S&P 500 chart, you can see the S&P 500 smashed that 3,000 level, just really just pushed right above it. The volume was moderate but good. Overall, we have a very bullish market here. And this is really despite, as I write here, a complex backdrop of economic warfare and geopolitical intrigue, right? So the stock market is really bucking all of the gloomy news globally, geopolitically, economically, predominantly because the Fed seems to be moving in the direction of rate cuts, which could happen very, very likely to see a rate cut at the end of this month, the July 30th and 31st FOMC policy meeting held by the Fed. So, the stock market is kind of pricing in that rate cut. That's really what's happening here. So the price is just it's price discovery. We're moving higher to find that area where we would be in balance with a rate cut. So we're up more than 20% year to date so far on the S&P 500. It's been a very good half of a year, I guess, and it just continues to move higher. And by the way, the Fed, there was a couple of comments I put in my commentary this week that the Fed chair Jerome Powell had made during his congressional testimony. He does this biannually on Capitol Hill. And he made two comments I want to point out to you. Number one, he said the bottom line is that the economy is at a very good place and we want to use our tools to keep it there. So in essence, the Fed with this rate cut is at least publicly stating that it's trying to preempt any kind of downdraft that would occur due to, an economic slowdown or recession or fallout from the trade war or whatever. And then he also added this statement: it's very important that this expansion continue as long as possible. Well, this is classic Fed speak. The idea that the present must be the minimum, that they must sustain this expansion for as long as possible. In other words, they must blow this bubble as big as it can possibly get, is what the Fed is basically stating. So, we'll see. I mean, certainly as we look ahead, we see problems. We see coming up this fall, Washington, the Republicans and the Democrats have to do something about a spending bill. They have to have a budget, and they're going to have to agree on something this fall. We'll see how that goes. And then we also have, of course, the debt ceiling debacle that's coming up. The debt ceiling debate's going to be here before you know it. It already kind of is here. But by September, the U.S. Treasury is already alerting Congress that they'll be out of money, and they're going to need a debt ceiling increase in order to manage, the amount of spending that they're doing. And the amount of spending, by the way, in the economy right now is outrageous. Government spending overall has just broken all measures underneath the Trump administration. For 8 long years, we listened to many people talking about Obama's overspending, right? I mean, it was certainly there. I mean, I was certainly one of them. It wasn't just Obama. It was just the fact that Washington was spending too much money, right? That's just too much. And as we pointed out in a kind of a cynical way, those voices have just kind of evaporated since the election of President Trump. And it's sad because the amount of spending that's going on now is just, it's off the charts. President Barack Obama couldn't dream of spending the amount of money now that President Trump is spending. And we're not trying to dig our way out of a economic crash that was the worst since the Great Depression, right? We're not bailing out banks in this environment. We're just operating in the quote-unquote greatest economy ever. And the fact that we have the amount of spending we have right now without any kind of major, calamities that we have to be dealing with, unlike the 2008, 2009 crash, it makes you wonder how much money Washington is going to have to spend whenever we do have another crash and we need more corporate bailouts, right? So it's just really quite stunning. But I think that's the primarily why the Fed is preemptively cutting rates here, is they realize that the fiscal debate in Washington, may or may not be resolved. The debate or the trade wars between the United States and China may or may not be resolved. There really wasn't a lot of good news on that front this week. There's lots of indication that that Beijing and Washington are further apart than they're actually telling us. So we'll see. We'll see. We could be in for an interesting summer. Let's just leave it there as we move forward. The Dow also crossed above 27,000. So the S&P smashed above 3,000. The Dow Jones smashed above 27,000. Made it look easy. Again, on moderate volume, but still very, very strong. New breakout territory here for the Dow. And the Nasdaq also setting a new all-time high, closing at a new all-time high, 82.44 on Friday. So all three major U.S. indices closing at record highs, all-time highs on Friday. So this is really, really quite something here as the market continues to move higher. Gold also continuing to hold up in this environment. One thing that I would tell you to watch on gold would be this 1350 area. This has been multi-year resistance and support. And right now you can see we failed at 1350 back in February. We came back again in June, knocked on the door, failed, but caught the 14-day and then rallied right above it on bigger than normal volume. And since that time, we've held the 14-day EMA. Well, that's good, but typically after piercing such a very important area of resistance, you typically see that area of resistance turn into support and be retested. So currently gold is just sitting at around 1412 right now. That's good, but it's really within a striking distance of coming back down and finding support at 1350, a touch of 1350, and then a rebound off of it would actually be very bullish. So we're looking for a test of 1350 this week, next week, maybe in the coming weeks. We want to see 1350 tested, touched, and then held, and then move back up. That would be a very bullish moment here for gold. So that's one thing we have our eyes on as we go forward. You can also see how gold continues to consolidate after those that big leap in June. You can see how it's consolidating right in here between the 1440 area of resistance and the 1390 area of support. This is near-term support at 1390. Speaking of gold, by the way, now rising in virtually all major currencies. You can see gold here. All of these charts are from the beginning of 2019. So it doesn't matter if you look at dollars, yen, Chinese yuan, euros. You could even look at the Swiss franc or the Swedish krona. It doesn't matter. You're going to find that gold prices are rising in all currencies right now. That is a big signal for those of you who are gold investors, but it's also a big signal to, these corrupt governments who continue to print money out of thin air. And gold is it's the beneficiary of all these poor monetary policies and poor fiscal policies. So it's playing its role, picking up as we headed into June and into May. You'll see that the price of gold in virtually all major currencies is on the move. Don't forget, if you want to be a part of our 2019 Trend Trading Online Boot Camp, that's coming up August 24th, 8:30 to 5 p.m. Central Time. It's a special all-day online learning event. You can learn to earn from the comfort of your own home. I'll be showing you exactly how to take trend trading and take it to the next level and actually turn it into an income. You can go to followthemoney.com/bootcamp to reserve your seat. Turning to our daily trading diary portfolio, you can see there's quite a few stocks in here. Comcast, Trade Desk, there's LPLA. We were just talking about there's Monster Beverage also in the list. We've seen Alibaba, one of the few stocks that is just trying to find its way higher. But there's quite a few profitable plays. This is just a little sample of some of the stocks that are in the portfolio. We have several in there right now. Lots of movement in the daily trading diary portfolio. You can also go back and look at some of our recently closed model trades. We keep track of every trading idea that we put out, and if it triggers, it goes on our archive, so we know how it performed. And you can see these are some of the closed trades that we have done. These are all of the recently closed trades, and you can see all of them going back for years on our website. But you'll see TKR, RLGT, CAG, CMC, SA, XLRE, all of these closing out with good gains. Our goal with our daily trading diary is 1 to 5% gain in 1 to 5 days. Sometimes it goes longer. You can see this took 19 days to get that. This took 1 day to get that. That took 7 days to get that return. So that's not always perfect, but that's kind of the goal, right? We're looking for 1 to 5% in 1 to 5 days. Sometimes, of course, we let our winners run and we cut our losers, short. So there's an update on that. Don't forget, if you want to talk to a trusted financial advisor and you don't have one, you can use our Christian Advisor referral service. It's a free service where we connect you with somebody who is a Bible-believing financial advisor who understands our 5 levels of financial freedom. And it can be a really great idea for you to sit down with somebody who can look over your information and help you when you need a guiding hand. So if you need any help with that, just click the link here or go to followthemoney.com/advice and request a free meeting or a consultation with one of those advisors. Well, that brings us to the end of our Robinson Report video update. I hope this was helpful to you. Look forward to seeing you again soon. Sure is an honor to serve each and every one of you. God bless you, and we'll see you next time.